evening. This is the market update for Tuesday, April 23rd. And actually, let's just start off today. We had a mini flash crash mid-morning today, in case you did not hear about it. Hackers were able to take over the Twitter account of AP Newswire and posted that President Obama was injured in a bomb attack, 2 explosions at the White House, and the market went from up 140 to down 8 points, and then instantly reverted all the way back up to plus 120 points. Nice little coup for those that gamed the market. I believe there was a stat, 260,000 E-mini future contracts traded within that 3-minute period. So ridiculous action, and just tells you how timid this market is, but how powerful the buyers can be whenever there is a dip. When we did the video on Sunday, you recall that I said common sense says this market is overdue for a big retrace, but if we stood back, looked at the charts, it would suggest that this was going to be an up week for the market. And here we are, up 300 points now over the last 2 days on a very nice little bounce off that trend line support. You can see RSI has bounced off the 50 level. As I mentioned in the video on Sunday, we had an extreme negative MACD, and the last couple of times we've seen extreme negative MACDs, we've seen a rally in the following week, and the charts are playing out just like that. We've got more economic data coming this week, but, probably really does not matter. The hedge funds and mutual funds are running this market right now. Caterpillar, awful earnings report yesterday, stock up. Apple, after hours, is up 5%. They did beat on their revenue number, but they guided woefully lower. I believe the low end of their guidance for the next quarter, $33 billion. Average estimate was for $39 billion. Stock up, $30+ a share. Yesterday we had Netflix. They posted net income of $2.7 million, and the stock gained $5 billion in market cap, up $50 a share. So, that's where all the action is in this market right now, that and chasing. But anyway, market still looks good for continuation over the next few days. Looking at the Dow Transportation, it was able to peek its head above these 3 moving averages that have been resistance for the last week, and we closed right underneath the 50-day moving average. So we should see this continue to pull the market higher in the next few days. We've got RSI trying to break a downtrend line that dates back to the March top. We're looking at a positive MACD cross. Stochastics are looking to break 50. So our market indicator, the Dow Transport, suggests that we should continue higher over the next few days. If we look at the 15-minute chart, you can see this little line here. This is that fake AP News hack dip that quickly got rebought. But one thing to look at on the chart is it's been a while. We're looking at a golden cross on the 15-minute chart. Last one we saw was, I guess it was a couple of weeks ago, but it was during that vertical up move. We didn't get a whole lot of heads up on that, but we should see that golden cross sometime tomorrow, and the average gain on a golden cross is about 150 points, although we do typically see a dip on the cross before we get a bounce back. Russell right up to the 50-day moving average as well. This index actually trades closer to the transportations than the Dow market, so I guess RSI about to break 50. Stochastics should be good for the small caps, but again, we're not seeing the kind of interest we would see. I guess the interest we're seeing in the small caps continues to be traders chasing. That's just the way of this market. Now, before we jump into some stock charts, I've got to bring this chart up. The NASDAQ bullish percent index, it's something we've been looking at over the last few months, and you can see we are in a definite downturn on the NASDAQ bullish comp, and this is a medium-term warning sign. It actually typically does this time of the year every year, and then we have a weak June and July. So, it's telling us that at least for now, we're looking at possibly having a weak summer. So we better enjoy what little scraps we can get out of this market right now. But anyway, let's jump into some stock plays. Based on the Twitter hack today, we are starting to see, and the actual large impact it had in the market brings that cybersecurity need to the forefront. I believe Bloomberg had a little piece out saying that $136 billion in market cap was wiped out today by that little manipulation of the indices by that tweet. But as you know, WYY, cybersecurity play, profitable. We had the biggest volume in this stock in over a year plus. I just went back a year. Biggest volume day on the stock. We are flushing the seller that has been capping this stock out very, very nicely. Earnings, I know they just reported earnings last month, but they tend to report their next earnings report pretty closely. Their next earnings report is around May 14th, so a little over 2 weeks away. And you recall the 2 weeks prior to that last earnings report, we saw a very nice 20% plus move to the upside on WYY. 60 cents is the breakout. RSI is trying to break 50, and if I draw this line in, we're also about to break the downtrend line in RSI dating back to that high back in February. We are also looking at getting a positive MACD cross probably tomorrow. Stochastics have broken up through the 20 level, another buy indicator. So the chart is a solid go here. They're profitable. Cybersecurity is front and center. They're getting ready for an earnings run. Chart looks good. All systems go for a nice little move on this baby over the next few days. Trading alert today was also on the pop scan, JOEZ. You recall 2 weeks ago, this was a rule of two play. Wasn't able to break out. Then they posted their earnings report and the stock sold off on earnings. But as I said in the alert, their earnings were actually very, very good. They had a one-time charge of $8.7 million related to some expenses. Actually, let's look and get the exact language here. They're calling it a contingent consideration buyout. It's essentially a non-cash write-off. That was $8.7 million. Other than that, they would have posted 3-cent EPS. Revenues up 13%. Those that wanted to sell are out, dipped under the 50-day moving average, which is typical on these retreating stocks, but now pushed back above it, and a break of the 20-day at 172 should set us free for another rule of two play. Now, this year, all the rule of two plays have worked. Some of them do dips like this and then end up romping to about 240. So we are locked and loaded for a very nice rebound on this stock. The volume has yet to come into it. Nice little uptick on it today. RSI breaking up through the 50 level. If we scroll down, Stochastics, exactly where we want to see him. Most oversold on Stochastics we've seen in the last 5 months since before this stock was under $1 and doubled. So this chart looks very, very nice for us for a nice move over the next few days. ZLCS, let me go over it. The little biotech stocks on a move over the last couple of days. When I was gone last week, our CPRX, boom. We were looking for best case scenario, 75 cents. It ran to $1.12. Big move on this stock. And actually, we'll go back to ZLCS. While I'm on CPRX, I mentioned this yesterday in the chat room as a short play if you could get shares. And the setup on this was I don't short a whole lot. When I do short, I short my system, which has an extremely high win rate. I would estimate 90% win rate on this setup. Doesn't happen a whole lot of times, but when it sets up, it can be very, very nice. Essentially what it is a stock up big on 3 days. 1, 2, 3. At the end of day 3, you initiate your short, partial position. And then the next morning, if the stock starts to turn red, you pick up the rest of that short. And you typically look for a 20% downside move. I said in the chat room yesterday we'd be looking for 80, 85 cents on the short down move, traded as low as 82 cents. Picture perfect setup on a short play with a high win rate. Kind of shorts that I like to do. But anyway, this move lit up another one that we actually did yesterday was TZYM. We jumped into this one around 46 cents. Stock went up almost 20% to 57 cents for a very nice gain. And we jumped into a couple of other plays on it. One of those plays that should have a nice little rebound is ZLCS. You can see over the last week or so, the stock is down almost 40%. And the reason for this was, A, it was on big volume, so we flushed out a lot of the residual sellers that were in the stock. And B, there was a lot of delisting talk floating around. And the company posted last week that they had been advised by the NASDAQ of their delisting criteria expiring. However, ZLCS just transferred to the NASDAQ small cap market. Before that, they were on the capital market. That is the larger value market. As of today, they are now listed on the capital market. I've never seen NASDAQ delist a stock that they just allowed to switch from one of their exchanges to the other. They will typically give them a 6-month extension. So with that in mind, this stock should give a very, very nice rebound over the next few days and fill that gap up to the 50-day moving average up there at 65 cents. We've got very nice support at 48 to 50 cents. This stock also, if you look at these circles, has a habit of steep sell-offs and then recovering all of that sell-off over the next week or so. I just notated 3 times on the chart here. So this is a stock deeply oversold. RSI up through 30. Stochastics where we like to see it. Looking very nice for a rebound as traders realize, hey, they're not going to get delisted. Also, they've got a shareholders meeting in June where they're going to ask for a reverse split authorization. NASDAQ is very unlikely to delist them within the next month, and by then we will be long gone, hopefully with our 20 to 40% gain on the stock. Nice setup here. PTN, another little biotech stock that we jumped into yesterday based on the movement we are seeing in the small cap stocks. PTN trades $10 million under cash. The company is free. It's finding a little bit of resistance right here at 62 cents. Target is a move to 70 to 72 cents. Positive MACD cross on the stock today, and someone was actually picking up a lot of shares. Someone was just parked at 60 cents all day long, buying whatever people had to sell. So that is a good sign. What we're looking for is a similar move as to what we saw on CPRX, where it was just treading water, boom. That is what we're looking for on PTN. So that's it for the video. We've got some very, very nice swing setups right now. I love the setup we have on WYY. The story out there is very supportive of a big move on this stock. As I've said before, this is a profitable stock that should be trading well north of $1 a share, in my opinion. We've got Joe's ready for a solid rebound. ZLCS the same, and we're waiting on PTN to get one of those CPRX type spikes. Very nice trades in the chat room today. We were doing very well on the solar plays like LDK, HSOL, CSIQ, which is another solar from the pop scan, had a very nice intraday pop. So some nice trades over the last couple of days. Even IGC, which was a very nice winner for us over the last 2 days. We jumped into this one down here in the 170 area. 244 high of the day today, almost a 50% gain. So nice plays are starting to work, and chart plays are starting to work. So I'm optimistic regarding that, even though we've got the other nonsense going on with the large caps. So that's it for the video. Have a great evening, and I will see you guys in the chat room tomorrow. Adios.